We are covering these 8 top stocks with big percentage gains today. Our review on MURA. Mural Oncology PLC lit up the charts today, finishing up 133% on the day with a staggering 259 million shares traded. It was one of those high-energy biotech moves that started with a 90% breakout in pre-market after the news hit, then followed by another choppy but aggressive 50% rally right into the early hours of regular trading. Momentum was flying, volume exploded, and even though the news was technically negative, traders clearly saw opportunity. Now for the context. Mural is an Ireland-based clinical-stage biotech focused on cytokine-based immunotherapies. Their main candidate, nemvaleukin, was designed to deliver the powerful anti-cancer effects of high-dose IL-2, but in a safer, more targeted way. It was being tested across several trials, including Artistry, 6 for melanoma and Artistry, 7 for ovarian cancer. But today, the company announced that based on the latest data, they're pulling the plug on all nemvaleukin development. The trials just didn't show enough benefit to justify pushing forward. That by itself might have sent a biotech stock down. But here's where things flipped. Mural also announced it's initiating a strategic alternatives process, which usually means they're looking to sell the company, merge, or pivot in a major way. Plus, they're slashing about 90% of their workforce, which signals a major cost-cutting effort and a clean financial reset. And maybe most importantly, they still have roughly $144 million in cash and marketable securities on the books as of December 2024. So what does that mean for investors? The core business is essentially being shelved, but now you've got a low-float company with a NASDAQ listing, a big pile of cash, and a board signaling they're open to all kinds of strategic moves. That's a recipe for speculative buying, especially in this kind of market where cash-rich shells can become acquisition vehicles or reverse merger candidates overnight. Today's price action was all about that setup. It's not about clinical promise anymore. It's about financial positioning and the potential for something bigger to come out of this corporate reset. Traders are already jumping in early, betting that the next shoe to drop could be a deal. Our review on SBEV. Splash Beverage Group Incorporated, the company behind brands like Tap Out Sports Drinks, Pulpo Loco Sangria, Saltequila, and Copa di Vino, had a wild ride today. One of those sessions where the stock seems to have had a full-on adrenaline rush of its own. The stock surged 104% on the day, with a 90% breakout right near the close of regular trading that spilled over into after hours. It looked like the kind of late-day momentum pop that traders dream about. Volume exploding, charts going vertical, and social media lighting up with speculation. People were scrambling to figure out if this was a leak of big news, a short squeeze, or just a full-blown speculative frenzy. But here's the kicker, it didn't last. After that rocket ride into the after hours, the stock quickly reversed, giving back a chunk of that late gain just as fast as it ran up. Classic case of what happens when there's more hype than headlines. No press release, no new distribution deal, nothing from management. Just straight-up market energy in a stock that caught fire, then cooled off fast. That kind of action tends to point to speculative trading rather than a shift in the underlying business. Splash has a decent long-term strategy. Build up undervalued or early-stage beverage brands and grow them through distribution and online channels. Their products are solid. Unique angles like Pulpo Loco's eco-friendly packaging or Copa di Vino's grab-and-go wine concept. But today's move? That was all about momentum and trading psychology. So if you're watching this name, maybe hoping for a turnaround story or riding the volatility, just keep your seatbelt fastened. That kind of snapback after hours says the market still isn't sure what to make of it. Our review on SUNE. SUNation Energy Incorporated, the solar and storage solutions provider with a strong local focus, had one of those trading days that feels like a full-blown roller coaster ride. Up fast, down even faster. So the stock popped a solid 42% during regular trading hours, which definitely got some eyes on it. That kind of move usually signals either fresh news, a short squeeze in action, or traders piling in on momentum. But what made this one stand out was what happened after the bell, a sharp 40% plus drop in after-hours trading, pretty much wiping out that big daytime rally. Now, that's the kind of whiplash that has investors wondering, what just happened? From what we can see, there wasn't any major news or new PR to justify the big spike. No new contract wins, no earnings, no flashy government subsidy headlines. That points toward the run-up being more speculative in nature, maybe a low-float name getting caught in a momentum loop. And when that happens without real news backing it up, it can unravel fast, which it did. Now, to be clear, SUNation does have a solid mission. They're focused on expanding local solar and storage services, from residential installations to grid services. And their brand portfolio, including Hawaii Energy Connection and E-Gear, gives them a bit of a diversified presence in the renewable space. They're tapping into the long-term energy transition trend, which absolutely has legs. But today's trading action? That was traders playing hot potato, not long-term investors building a position. If you're watching SUNation from an investment angle, this is the kind of volatility that screams wait for clarity. No shame in letting the dust settle before stepping in. Our review on ARBB. ARB IOT Group Limited, a Singapore-based player in the Internet of Things space, just had one of those eye-catching days in the market, up 42% on the day, and naturally, it's got people asking what's driving the move. Now, for a bit of context, this company's got its hands in all kinds of IoT verticals. We're talking smart homes, smart agri-tech, industrial system integration, and even gadget distribution. So it's not just a one-lane play. They've spread themselves across multiple IoT segments, which gives them some decent optionality. The smart home and building side probably gets the most attention, especially with how global demand for automation and energy-efficient solutions keeps ramping up. But back to today's pop, there wasn't any big headline or new press release, so it feels like this was more of a trader-led surge, possibly fueled by low-float dynamics or some short covering. Sometimes a stock like ARB IoT, which has flown under the radar, just catches a spark and runs when volume pours in and liquidity's tight. It's also worth keeping in mind the broader trend. Anything tied to IoT or automation is back in favor lately, especially with how AI and smart systems are becoming the backbone of everything from homes to farming. So when a company like this gets rediscovered by the market, even briefly, you can see a spike like this. Still, without hard news to back it up, today's move feels more speculative than fundamental. That doesn't mean there's no potential here. ARB IoT's diversified model is interesting, but investors would be wise to keep both eyes on whether any real developments follow this price action. Otherwise, we've seen how fast these kinds of gains can unwind if the hype fades. Our review on KSCP. Knightscope incorporated a robotics and AI company laser-focused on public safety. Had a big moment on the tape today, up 41%, which definitely caught some eyes across the small-cap crowd. Now, Knightscope is one of those companies that's easy to remember because it sits at the intersection of security, automation, and robotics. They're building autonomous security robots, like the K5 and K1 units you might have seen roaming corporate campuses or outside shopping centers, along with emergency communication systems like blue light towers and call boxes. The big pitch here is tech-powered deterrence and round-the-clock surveillance, which is growing appeal in today's world of increasingly digitized and automated safety infrastructure. But let's talk about this pop. What's driving it? From a fundamental standpoint, there wasn't a huge press release or new contract announcement today, so this looks like more of a sentiment-driven rally. And to be fair, Knightscope is the kind of name that can really move when volume heats up. Low float, heavy short interest, It's got all the ingredients for a sharp upside move when things click. What's interesting, though, is that this rally comes amid a broader narrative shift. There's been renewed attention on AI-enabled hardware. Think robotics with real-world applications. And Knightscope's pitch of real-time crime deterrence through autonomous patrols starts to sound a lot more appealing when folks are thinking about AI outside of just chatbots and code completion tools. That said, this stock has had its share of boom and bust moves in the past, so investors should keep that in mind. Unless this rally is followed by new deals, customer expansion, or revenue updates, it could be a short-term momentum move rather than the start of a longer uptrend. But for now, it's definitely back on traders' radar, and today's 41% surge is a reminder that Knightscope is still in the game. Our review on DWTX. Dogwood Therapeutics, Incorporated, formerly known as Virios Therapeutics, made some serious noise today. Stock popped 38% with a wild 75% breakout move right near the open, hitting multiple trading halts on the way up. And if you're wondering why this low-float name suddenly caught fire, well, you're not alone. This kind of action definitely puts a name like Dogwood right back on traders' radars. So, quick backdrop here. Dogwood is a clinical-stage biotech working on some pretty interesting stuff in pain and viral-related illness. They've got three main assets: Halneuron, IMC-1, and IMC-2. Halneuron's the current headliner, a non-opioid NaV1.7 inhibitor aimed at treating neuropathic pain, especially from chemo. That one's in Phase 2b. Then there's IMC-2, which is being studied for long COVID, and IMC-1, their more advanced asset that's Phase 3 ready for fibromyalgia. It even has FDA Fast Track designation, which helps streamline development and review. Now, as for today's move, there wasn't any fresh PR or clinical update to explain the surge. But this smells like a momentum run in a low-float biotech, possibly triggered by speculative buzz, algo momentum, or even chatter from retail circles. The setup was classic: big gap up, halts early on, then it cooled off a bit, but still held on as solid gains into the close. For investors, it's a double-edged sword. On one hand, the stock's back in play, which could make it easier to raise capital or attract interest ahead of any pipeline updates. On the other hand, without a hard catalyst today, you have to stay grounded. It could be a short squeeze or a momentum chase rather than a value re-rate. But it does show you the market's willing to take a flyer on biotech stories again, especially those with real clinical stage assets and a history of fast-track attention from the FDA. Either way, Dogwood just reminded the market it's still very much alive, and traders will be watching what comes next. Our review on APM. Aptorum Group Limited had itself a pretty solid day in the market, up 32%. And for a small-cap, clinical-stage biotech, that kind of move definitely raises some eyebrows. So let's take a beat and talk through what's going on here. For folks just getting familiar, Aptorum's a UK-based biotech that's all about targeting diseases with unmet needs, especially in areas like oncology and infectious diseases. Their pipeline is led by a few intriguing assets. ALS-4, which is a novel antivirulence treatment targeting bacterial infections without necessarily killing the bacteria outright, which would be a game-changer in antibiotic resistance. Then there's SACT-1, a repurposed drug developed through their Smart ACT platform, and it's focused on orphan oncology indications. And on the diagnostic side, they're working on the PADS-DX test, a molecular-based rapid test for pathogen detection, developed in collaboration with a research arm in Singapore. Now, today's 32% move didn't seem tied to any fresh press release or big trial result. So this looks more like one of those speculative biotech rotations. Could be some renewed retail attention, maybe algo triggers, or traders circling the name ahead of a potential update. These kinds of spikes in low-float biotech names aren't rare, but when they come, they can quickly change the tone around a stock, even if the fundamentals haven't shifted overnight. What's interesting is that Aptorum's pipeline, while early, does touch on some big deal areas: superbugs, cancer, rapid diagnostics. If the market senses that even one of these programs could get traction, especially with regulatory or partnership momentum, this name could keep climbing. So yeah, no headline catalyst today, but this pop reminds investors that Aptorum's still on the map and probably worth keeping an eye on if you're looking for asymmetric upside in the small-cap biotech space. Our review on CNTB. Connect Biopharma Holdings Limited had a nice little rally today. Stock popped about 27%, which definitely caught some attention in the small-cap biotech space. And while it wasn't one of those earth-shattering, headline-driven surges, the move still speaks to a bit of renewed interest circling around this name, especially given the kind of pipeline they're working with. Now, if you're new to Connect Biopharma, here's the quick rundown. They're a clinical stage biotech with a pretty sharp focus on T-cell-driven inflammation. So we're talking chronic conditions like atopic dermatitis, asthma, and ulcerative colitis, the types of diseases that have big patient populations and room for better treatments. Their lead candidate is rademikibart, which is an IL-4 receptor alpha inhibitor. That puts it in the same space as drugs like Dupixent, which is a monster in the atopic dermatitis market. So clearly, there's a big opportunity here if Connect can deliver compelling data. They've also got icanbelamide, which is an oral small molecule targeting S1P1, a hot space for inflammatory bowel disease. So between AD, asthma, and UC, they're aiming at big, established markets with drugs that, if successful, could be real value drivers. Now, today's 27% jump doesn't seem to be tied to any breaking news, but that kind of move in a biotech name usually sparks speculation. Maybe there's anticipation around upcoming data or regulatory updates, or it could just be technical traders jumping in on momentum. In low-float names like this, it doesn't take a ton of volume to get a big price swing. Bottom line, this might be a speculative pop, but Connect Biopharma's pipeline does put them in striking distance of some high-value therapeutic areas. If you're an investor tracking mid to late-stage biotechs with potential catalysts on the horizon, this might be one to circle on your radar. Please subscribe, give the video a like, and watch more from our playlist. Thanks.